AMD stock managed to find its footing on Monday, bouncing after last week's volatility and closing the day at $159.79, up $2.40 or about 1.5%. For investors watching closely, this move was more than just a routine green day on the board. It was a reflection of resilience, of how sentiment can shift after a stretch of pressure, and of how markets sometimes recognize when a stock has been pushed too far down by headlines rather than fundamentals. The question we're facing tonight is simple. Was this just a relief rally, or is AMD showing that it has the strength to reclaim momentum as we head into the rest of the week? Let's start with the context. Last week, AMD had to contend with a barrage of news. The most talked about development was the $5 billion partnership announced between Intel and Nvidia. That alliance, focusing on foundry support, AI-enabled PCs, and data center collaborations, grabbed headlines and immediately cast a shadow over AMD. Investors worried that AMD, which has been steadily climbing in servers and making inroads in AI accelerators, might be squeezed if two of its biggest rivals joined forces. On Thursday and Friday, we saw AMD's stock pull back, settling in the $157 range and testing the lower end of a technical support zone that has been critical throughout the year. But the more the dust settled, the clearer it became that the Nvidia-Intel partnership isn't necessarily a death knell for AMD. If anything, it's a reflection of how massive the AI chip market has become. Nvidia is so constrained on supply that it needs to tap Intel's foundry to keep up with demand. Intel, for its part, is desperate to prove that its foundry strategy has credibility and can attract top-tier partners. Both of those factors say more about Nvidia's and Intel's challenges than about AMD's vulnerabilities. AMD isn't being excluded, it's playing its own game, and that game revolves around consistent execution on products like the MI300 and MI350 accelerators, as well as building momentum toward the MI400 roadmap. That distinction matters, because Monday's bounce looked like investors stepping back and reassessing. They had sold off last week on the headline risk of the Intel-Nvidia tie-up, but as the weekend passed and no new negative catalysts emerged, it became clear that AMD's story hadn't changed. Its products are still being adopted by hyperscalers like Microsoft, Oracle, and Meta. Its ROCm software stack is continuing to improve and make inroads against Nvidia's CUDA ecosystem. And it still trades at a valuation discount to Nvidia, which leaves room for upside if execution continues. Monday's buying was a recognition of that. Another factor helping AMD right now is the export approval news surrounding its MI308 chip. For months, the overhang of US export restrictions on AI chips bound for China has been a cloud over semiconductor names. Investors worried that key markets would be cut off, that sales would suffer, and that geopolitical risk would outweigh fundamentals. But the recent approval to export MI308 chips to China has helped lift some of that concern. It shows that regulators are willing to allow certain products through, and that AMD can still participate in that critical market. That doesn't erase the risks, but it helps to balance the narrative. And when you combine that development with Monday's price action, you can see why confidence has started to creep back in. We also need to consider the macro environment. Last week, the Federal Reserve cut interest rates for the first time this cycle, with the possibility of more cuts to come. On the surface, that should be good for growth stocks and tech names. But rate cuts often cause volatility in the short term as investors reposition portfolios, rotate out of certain sectors, and rethink valuations. AMD wasn't immune to that choppiness. But with Monday's bounce, it looks like the initial turbulence is giving way to more supportive conditions. If rates do continue to drift lower, the discount applied to AMD's future cash flow shrinks, and that makes its long-term AI growth story more valuable. On the technical side, AMD's ability to hold the 155 to 160 support zone has been critical. Each time the stock has been pushed into that range, buyers have stepped in. That's a sign of accumulation. It tells us that institutional investors, the big funds and long-term players, see value at those levels and are willing to absorb selling pressure. Monday's bounce off that zone reinforces the pattern. It suggests that the market recognizes AMD isn't breaking down. Instead, it's consolidating. And consolidation at support can be the base for the next leg higher. Analyst sentiment is another piece of the puzzle. In recent weeks, firms like Truist and Melius Research have turned more bullish on AMD, raising their price targets and highlighting the company's growing role in AI infrastructure. Truist in particular moved its target to $213, citing adoption by hyperscalers and a credible product roadmap. Melius pointed to the diversification of AI workloads, noting that inference, efficiency, and cost-effective scaling are becoming just as important as raw training power. Both firms see AMD as a key beneficiary of those shifts. And while there have been downgrades too, such as Seaport's move to neutral, the net balance of sentiment suggests that Wall Street recognizes AMD's potential. Monday's bounce aligns with that more optimistic tone. So, was Monday just a relief rally, or is it the start of something more? The answer depends on perspective. From a short-term trading view, it may simply be a bounce off support, aided by a lack of new bad news and a bit of bargain hunting. That could mean the stock drifts sideways or even retests support before making a decisive move. But from a longer-term perspective, Monday looks more like confirmation that AMD's story remains intact. The fundamentals are still there. The competitive threats are real, but they don't erase the opportunity. And with the stock trading below $160, the risk-reward balance looks attractive compared to where analysts think it could go over the next year or two. It's also worth remembering that the AI infrastructure cycle is still in its early innings. Lisa Su has been very clear about this. She calls it a 10-year cycle, and we're only in year 2. That means the demand for accelerators, CPUs, GPUs, interconnects, and software is only going to grow. Hyperscalers are scaling up capacity, enterprises are exploring AI workloads, and new use cases are emerging every quarter. In that kind of environment, there is more than enough room for multiple players. Nvidia will lead, Intel will try to reinvent itself, but AMD has carved out a role as the credible alternative. That role is unlikely to shrink just because two rivals announced a partnership. For investors, the takeaway is to keep the bigger picture in focus. Volatility is part of the journey in this sector. Headlines will swing sentiment. Partnerships will cause temporary sell-offs. Export rules will create uncertainty. But when you zoom out, the trajectory is clear. AMD is steadily gaining share in servers, holding its ground in PCs, and pushing into AI accelerators with real momentum. Monday's bounce was a reminder that markets can't ignore that progress for long. Looking ahead, the catalysts remain familiar. Product updates, customer adoption announcements, and November's Analyst Day will all shape sentiment. If AMD can show more concrete revenue traction from its AI chips, the bullish analyst targets will start to look conservative. If export approvals expand, the geopolitical overhang will shrink. And if the Fed continues to cut rates, the macro tailwinds will grow stronger. Those are the pieces to watch as we move into the rest of the week and beyond. In the end, AMD's 1.5% gain on Monday wasn't about a single headline. It was about resilience, about buyers stepping in after a period of fear, and about the recognition that the long-term story is still compelling. For those who believe in the AI cycle, the pullbacks into the 155 to 160 range continue to look more like opportunities than threats. Monday confirmed that once again, and as we head into the next stretch of trading, that's the mindset many investors are likely to carry with them.